This is the Friday, September 1st, 2017 version of the Market Plus segment. Joining us now is Sue Martin. Sue, welcome back.
Thank you, Mike.
Hard to believe we're already into September.
I know.
Man, while we're coming into September, we have seen lean hogs on a pretty aggressive sell-off here for the past several weeks. Sue, do you anticipate us getting a bounce here before too long, or are we looking at last year's lows again?
Well, I think what's caused the market to have, first off, the market came in with a big discount to the August contract. So then when you got the August off the board on the 14th, the October was so discount that I think it just had to do a little bit of alignment. Then it kind of fell apart because, 71 was a pretty good ticket. We thought maybe you might get to 74, but wasn't sure about that. And then, of course, you also had the selling hit in the cattle, which kind of helped drag it down, too. And you've got more poultry. Chick placements are up. Hog numbers are expected to be up. You have a quarterly hogs and pig report at the end of the month. That's expected to really confirm that there is more numbers and an expansion. And so, the whole gamut, I think, has weighed on the hog market and kind of kept a lid on it. Okay.
Demand hoping going to pick up? Have you been seeing any indication?
Well, I think export demand will pick up. I think that, you look at around the world and even overnight, the PMIs that were coming out were really good over in Europe and into Italy. And so I think that's all good signs. But I also think that when you look at the hog industry, we're probably still going to push a little lower, but the killing capacity has been ramped up. Yeah. And the dollar has been on such a demise that maybe we weren't getting as many hogs coming into the U.S. as we could have if the dollar had been stronger. Now, we've had a bounce this week in the dollar, but I kind of think the hog market's going to be held at bay a little bit.
Okay. We're facing some headwinds.
Yeah.
Well, now I want to turn over to our questions from our followers on Facebook and Twitter and encourage all of you to send in a question. Whenever you got one, just shoot it over to Market to Market. But this first one is from Jared in Mattoon, Illinois. And Jared references last week's episode when Darren Newsom was on. And he says Darren was very bearish, not only on the corn market, but on wheat as well. And Jared says if he understood him correctly, he encouraged planting fewer wheat acres. And now Jared in Illinois says for those of us in corn and bean country trying to avoid a saturated bean market like we're seeing in wheat, what do you recommend?
Well, for one thing, farmers always have a tendency to market their beans and hang on to the corn. Mm-hmm. And so I don't see supplies that aggressive. The one concern I would have is that the yield, FC Stone increased their yield on the beans, and the Pro Farmer Tour kind of told us what they've seen out there to kind of fall in line with the USDA. So if the USDA was to just come in and push that yield up a little bit, remember that yield that they came out with in August was as of August 1st when they didn't even know squat, what was out here. Mm-hmm. And the weather in August has been not hot and dry, but cool. And maybe some showers that seem like we did pick up a little more shower activity. So it would have the feel that beans should be doing better. Maybe there's a lot of disease out there, too, from what I'm picking up. But regardless, what is out there right now is perceived to be better. You've had crop condition ratings start to inch up. So I think the USDA will raise the bean yield. I think they'll lower the corn yield, but they'll raise the bean yield. And if they do, boy, it wouldn't take anything to have a carryout on new crop that could all of a sudden jump over 500 million bushels. So we need good demand. Brazil's exports were record high. It's estimated they've exported about 56.9 million metric tons so far from January through August. It was estimated they'd export 63 million metric tons this year. So they're kind of getting on the downhill slide of it. The U.S. is very competitive against Argentina and Brazil, so we look to be in the market of favor. But boy, when you look at our export sales, we're running behind on corn and soybeans. Wheat's caught up pretty close to the 5-year average, but the corn and soybeans is running decisively behind. Okay. We need to see this pickup continue, and of course record exports in corn as well out of Brazil. So the farmers, not only in the U.S., but in Brazil and in Europe, are so frustrated with the cheap prices that they're hanging on. That might give you a little bit of support to a market temporarily, but it also says competition's looming down the horizon.
Right. Any bushel not sold today is a bushel that can be sold in the future on any kind of a rally.
But then we have dirt cheap prices. So if we're going to see prices coming down in the future over the course of this winter and what have you, I would have to say it's because of carrying charge markets just dwindling and lining up. I think we're seeing the worst. Boy, with wave 4s and, you know, and then corn close to a wave 5 at the 340 level, very close. And the response we got was very typical of coming out of something like that on a wave 5. But we need to see a little more proof. And like I say on the show, I'm not sure I trust everything just yet.
Need the combines to roll.
Exactly. And when I talked about the 84-year cycle low coming due in August, what is that saying? It's saying I expect the market to go down. It's to be a low. So the markets have to fall to fulfill that. And we've gotten that. Now we need to see it stabilize. But again, boy, beans are acting awful lackluster, and they are the better price of everything.
Right. And that leads right into our next question from Dustin, who's in Andover, Iowa. He wants to know, what does your strategy look like for managing unpriced bushels that will need to be sold this fall in the corn and the bean markets?
Well, that's a tough one. I would retain ownership if that's the case and you're moving that grain. I would come back and try to have some call option strategies. You know, maybe you sell some out of the money puts and then turn around and own some calls back. Knowing that if the market breaks down, you could be exercised on those ones that you sold that are below the market, but then that lets you be long from a cheaper price. And then, of course, your calls that you bought, you didn't pay as much for, but they're going to be worth less. They aren't going to be worth anything.
Right.
But
worth
that's
less,
one way. That's one way to maybe work yourself in to have a cheaper price in case the market breaks. And if it doesn't, you're going to be happy because you've got the calls on to help you protect.
Move it to the upside.
Yes.
Our next question comes up from North Dakota, or comes down from North Dakota, I should say. This is from Easy Money in the Red River Valley of North Dakota. He's on Twitter.
I like that name.
Yeah, exactly. He's on Twitter at BankerFarmer1. He wants to know what's in the cards for diesel fuel prices this fall with Harvey's impact on the Gulf Shore. Do you expect short-lived gouging hysteria, or could this be a longer-term impact?
I think diesel prices could have a longer-term impact here. Yeah, it's expected you might push the price higher because everybody's going to need to get stuff loaded or taken in, and I think a lot of people didn't think about booking with Hurricane Harvey coming in. But then in the meantime, and Hurricane Harvey was way worse than they expected too. Going offshore, coming back on, they just kept getting hammered.
Hitting all the crude oil refining places.
Oh my gosh, yes. And so I think that is going to cause some shortages, maybe temporarily, but here's the kicker, corn's behind. If we get a frost or we stay abnormally cool, now the next thing's going to be, it's still going to be slow to come around. We very well may have a crop that you have to dry down this year, and that's going to put a little added demand in there too. So I'm thinking prices of diesel could hang in here a little longer than you think.
All right. Well, Vance in Nebraska City is trying to find some positives. Vance is on Twitter at Proverbs262_6dad, and he wants to know, is the price we're at, an 84 low in soybeans, is that low enough, or wave 5 in corn, to reduce expansion of acres in Brazil?
I've heard talk that acres for corn is going to drop down a little bit. Bean acres, I think they might try to hang in there. Bean acres are expected to be pretty decent again, but the bottom line is it's thought that the production could drop back this year. Now, we're looking at, right now, a forecast for Brazil as being warm and dry, some areas almost drought-like. And then you look at Argentina, and Argentina may be, some areas up to the north may be a little bit on the warm and dry, but the rest of it almost too wet. So we'll see what happens as we go in. Our Brazil doesn't start planting until at least the middle of September because of Asian rust. If they're warm and dry, they may not have a problem with Asian rust. But if, and they didn't have a major problem this last year either. But they always spray ahead of time because if they wait till you see it, it's too late. But if it turns wet, they might have more of a problem with Asian rust than they've had, and that could knock the yields a little bit too.
Okay.
It just depends on how good those fungicides are going to hang in there. Those crops could mutate. You never know. It just depends, but we'll have to watch the weather. I think we'll see a little bit of a pullback, but they've got the acres. It's going to go to something. We've been seeing CONAB do the subsidizing to farmers in Mato Grosso. About 28% of that crop's been getting subsidized already. That's helping those farmers out a little bit. So it's going to be an interesting year ahead. I still tend to be an optimist for the next year. Remember, it's a year of an 8. Years of an 8 tend to be more price positive. And the USDA raised prices a little bit here in a recent estimate. So that's a good sign. So they must be thinking, let's put it this way, they raised farmer income. Now, how do you do that unless you're thinking prices are coming up?
Gotcha. Now, our final question from our viewers comes from Shelby in Decorah, Iowa. Shelby's on Twitter at Cornelius_1993, and he wants to know, will we see Harvey impact our commodity markets, corn and beans, as the farmers in the South take the hit from this hurricane?
Well, it would have to be because of wetness, slowing up harvesting. Beans don't like wet feet, that sort of thing. And they are going to get some of that. But, so far the market hasn't really cared.
Okay, yeah.
It's just like I say, the market's got a funky feel to it. It's just negative. But then that's everything. You look at politics, it's negative. The media is negative. The attitude towards market, negative, or watered down on reactions. So I think that we're going to have to let this market play its hand here a little bit.
Okay.
It would be wonderful that we've just sort of coincidentally had another low again. I just am not sure I believe it. I think we're going to have to get those combines rolling and have it proven, because there is another wave 4 on beans at 890.
Ooh, okay.
So
that could be in the cards.
Yes.
All right. Well, Sue, before we let you go, we want to get our final question from an Iowa State student. And before we get to that, I want to tell our audience that we are at the end of our stockpiled questions from Iowa State students. So now, folks, it's over to you. We are looking for long-term questions. What are you thinking about the future of commodity prices that you want our analysts to answer? If you have one of those questions, DM us on Twitter or send an email to markettomarket@iptv.org, and we'll work out the details about how we can get you on Market to Market in the Market Plus. So, Sue, for you, we have a question from Craig up at Iowa State University, and here it is.
What's the biggest hurdle for someone starting out?
The biggest hurdle for someone starting out in farming? Money.
Money. I was going to say it's a big question, but it's kind of got one answer.
Yes, but there are some really good incentives for a young farmer getting started, where if your net worth is $600,000 or less, the person who rents to you can get, in the state of Iowa, can get, I think it is 7% off their state tax.
Yep.
The same is true with someone helping you out with equipment, sharing equipment with you. They have, tax, benefits as well. It's a 2 to 5 year program. There are things out there, but I think, one, a student out of Iowa State, they've got to be taking marketing. And that's a step in the right direction, because marketing is one of your biggest hurdles in farming.
Yep. You don't make any money growing a crop, Sue. You make it selling the crop.
That's
exactly right. Well, Sue Martin, thank you so much for taking the time to talk to us this week.
Thank you for having me.
Join us again next week when Don Rose will sit across from me at the Market to Market table, and we'll explore the battle for GMO oversight in Oregon. Until then, thanks for watching or listening. I'm Mike Pearson. Have a great week.